Hey,
Hi, Tim.
how you doing today?
I'm doing well. How are you?
Good, good. I'm excited to chat a little bit about TA today. I got some graphics here
Yeah,
behind
I
me.
see. That's awesome. I was thinking this is definitely a topic that is good to have visuals for. So, hugely appreciate that. Um, yeah, that's awesome. I think we can just, I don't know how long you've been on. I just started, so looks like a few
Okay,
more people might be joining. But, anyways, for people who are just getting here today, we are going live with Crypto Weatherman to talk all about TA, just TA basics, how to apply TA to your crypto trading. So, anyways, make sure you're following Crypto Weatherman, make sure you're following CoinDesk, and give us some likes. It helps people who, come across our live want to join and want to learn about TA. So,
yeah,
yeah.
this is really exciting to chat about. Because well, I'll talk a little bit about my history, like how I
Yeah.
came on to TikTok. So I came onto TikTok probably around April, which
Mhm.
was around right here. This is Ethereum on the monthly chart, around right here.
Nice.
Um, so I came into, let me go back a little bit more. In 2019, 2020, I was into crypto and I was kind of accumulating Ethereum quite a bit at that time.
Hmm.
And I downloaded TikTok actually to check out a dairy farm. And it never planned to
Nice,
become Crypto
nice.
Weatherman.
Of
Uh,
course.
kind of another story of how that came to be. But I remember seeing this like, Bitcoin's going to 300K and XRP to the moon and Ethereum's gonna hit 10K and stuff like that. And I remember watching that and I'm like, like, and it was getting hundreds of thousands of views and stuff like that. Um, and of course, there's a lot of scams going on. And so
Totally.
that's like what kind of got me onto the platform. I was actually
Hmm.
sitting in a creator that goes by World War Bitcoin. I was sitting in
Mm.
one of his lives, and it was funny. My screen name at that time was Truthless21. It was just a random screen name.
Yeah.
But I made some like TA comments in his live chat, and he was like, "You should
Hmm.
make a video." And so that's really what started
Nice.
it. But yeah, it's I want to prove that TA is this beneficial tool. And what I've
Hmm.
noticed, particularly in crypto, it's a very bruh mentality. It's very like speculative. Like that's how I feel about it. It's like,
Hmm.
um, and so I want to break that in terms of like I started in traditional stocks and stuff like that. Um,
Totally.
Much more conservative world over there.
Hmm.
But to show that some of these tools can help you make a better decision. No, it's not gonna make you instantaneously rich. But
Hmm.
let's put the odds in our favor. That's really the goal with TA, and to teach people how to use some of these. It took a couple of months to prove to people that it was beneficial.
Yeah. Well, I can imagine, especially because a lot of people with, technical analysis backgrounds are coming from a more traditional world of investing. So might not
Hmm.
necessarily want to be able to apply that to crypto because, of the notions that the market's so volatile and that, you can try to, use the death cross indicator to see that Bitcoin's going into a bear market, but then 2 months later, it's an all-time high. So, there's a lot of different things that kind of um, might throw people off about it, but I'm definitely here to break down that notion. So I guess just starting, what's technical analysis in your own words?
I mean, I think it varies from trader to trader and investor because there are 1,000 different ways to do TA.
Mm-hmm.
But if for me, it's identifying a pattern on the chart or identifying multiple indications that will give me a high probability of success. Some of my forecasts, like one thing with my channel is like one day I'll do a forecast for Luna, another day I'll do one for H bar, another day I'll do one for Bitcoin. And it's because I wait for those opportunities to come along. Because like I would say a crypto at any given point, I would say 20% of the time it's in a forecastable position. I can say
Mm-hmm.
very good chance it's going to go up or very good chance it's going to come down. The other 80% of the time I won't touch it. So that's why like, my page has got, 500 different cryptos that I've talked about. And it's because, when I want to make a video on something bullish or bearish, I go searching and I find it to
Mm-hmm.
be in my requirements. And so,
Totally.
if you want to time the market, you actually got to practice patience.
Mm-hmm.
For me, what is TA? It's finding patterns per your own trading rules that increase the probability of success, whether you're shorting, longing, whatever it may be. But I
Mm-hmm.
mean, everyone's got a little bit different of a definition of that. So, is my way the best way, the perfect way? No, there's other great traders out there. So find the definition and fit it to your own, lifestyle. Like, is day trading practical for someone doing a
Mm-hmm.
9 to 5 job? Probably not. So, I mean, when I
Yeah.
teach TA, I say this is, okay, if I had to work from 8 to 4, I would probably adjust my style this way. So
Mm-hmm.
it's a little bit different, but for me, it's just finding patterns to increase my probability of success.
Totally. So when you said about, teaching TA, I guess what's the biggest difference in TA for stock, like the stock market versus, crypto markets? And when
So,
you're kind of teaching that, how do you go about that difference?
so for the longest time while I was building my page, if there was a lie that I told the community, the lie was that uh, crypto's more volatile and it's harder. Um, the truth is TA is actually easier in crypto than it is in stocks. And let me give you an example. Uh, we always talk about fraud and manipulation and corruption and stuff like
Or,
that. Like we're seeing, politicians starting to go after crypto now. Uh, but the thing is, we've also seen those charts of the politicians that have made a ton of money. They've outperformed the S&P 500. Okay,
Mhm.
so there is a lot of behind the scenes meetings that you and I are not privy to. And so those types of, I would say, like stock market is actually a bit more manipulated than the crypto market is. Uh,
Interesting.
I mean, you see, you see the politicians and their returns for the year. I mean, they should not be theoretically beating Warren Buffett, just as an example.
Yeah.
But one of the best stock trades that I ever did was Oshkosh, and the way that
Yeah.
I did that, it wasn't through TA. It was me cross referencing the board members of the Oshkosh executive team and their LinkedIn profiles with politicians. And out of this was for
Wow.
the mail trucks. Like, so this was a open bid. There was 4 companies competing to do all the mail trucks.
Hmm.
Um, and they had the most relationships and were on the same political parties, and sure enough, they won it. So that's an example of that world being manipulated, whereas crypto is much
Interesting.
more natural money flow. Yeah, we have our pump and dumps. There's 16,000 cryptos, whereas like stocks, there's about, I think it's like 3,000 or 4,000, somewhere around in there. So I
Totally.
mean, if I want to do TA on something like Solana, or we'll say Algorand or Cardano or something, it's actually a
Hmm.
bit more natural money flow momentum patterns that happen in crypto. uh, it's more reliable over there. Again, it's not 100%,
Hmm.
and then that's why I make a video every now and then. I'm like, hey, I got this and this wrong, because you get some of these creators that are like, oh, look, I got 95%. I'm like, yeah, I bet you did, buddy. So
Yeah, totally. And talking about that manipulation, do you think that, the overall decentralization of crypto has to do with that and the fact that there might not be this ability for, people to like, get in there and kind of change things around without people not understanding why?
yeah, in my mind, we're talking about energy costs, and Joshua, Jake, and I have been talking about
Mm.
marginal cost of production, and a lot of that stems from what the price of energy is. I mean, I've got the sheets around here, but the math behind it is pretty heavy. So, I mean, I think could it be manipulated? Absolutely. I mean, if you and I both had, $100 billion and we wanted to go pump the price of Bitcoin, you and I would have the power to do that.
Hmm.
Miners also have, some influence in terms of what they're selling off at, and a lot of that depends on what's happening. I mean, look at China when that happened back, a few months back.
Yeah.
So I don't, I know this is unpopular, but like the whole decentralized notion, well, we've got 16,000 cryptos that are decentralized. Like,
Hmm.
it's not a phrase that gets me excited because there's tons of them that make those claims.
Yeah.
Um, we absolutely have the influence and the power to control the numbers and the price action. So, again, I came into crypto to make a lot of money, and it's because I started to see that these patterns were volatile, but yet still relatively predictable. So I
Hmm.
go against the grain a little bit in the crypto community with that, but we're all here to make crypto like adopted and stuff. That's what I would like to
Yeah.
see, but I'm also trying to make money on that journey.
Absolutely, absolutely. Yeah, if you have any questions, by the way, on your end, I'm just realizing we can make
Yeah.
schedule
Oh, I
a
got a
moment
few
to
in
answer any
here.
questions.
I got a couple other crypto creators.
Oh,
Crypto
awesome.
Presidente, yeah, from
And
Miami.
while you're looking, for people who have just joined, make sure you're following Crypto Weatherman. Make sure you're following CoinDesk. Give us some likes. It'll, get people to push us to the For You page. Make sure people will be able to see this, be able to learn along. Yeah. If there's any, oh, yes, perfect. Getting some follows.
Yeah.
Um, yeah, any questions that come up, or we can, keep
A lot of them are
chatting.
just kind of like giving hearts and chatting. Going against the trend is a good rule. No, no, you want to trade with trend. That's one of the most important things. It's like if you're
Mm-hmm.
trying to short in a massive bull market, it's a really terrible move. And that's why I kind of did a little bit of a victory lap as I was expecting a reversal today on the 20th, and I saw it coming around. I do think we're going to have a bullish continuation. Now, before I start doing a bunch of longs and stuff, I want to see some certain levels be achieved. But I mean, the last couple of weeks have been a bearish trend. So shorting in this market would be the predominant mindset of most. Again, I love H bar. Time to short it sometimes. So how does
Totally.
Coin? Do, 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 do. How does
Um,
CoinDesk differentiate from their competitors? That's a good question for you.
Yeah, I mean, well, we are a, crypto news site. So, people sometimes think, oh, we're, trading platform, or they mistake us for something like Coinbase. But no, we are a media publisher. So we are publishing on the crypto news. So essentially anything, whether you're reading our newsletters, watching our TV shows, reading our articles, we are publishing news about crypto. So essentially that's where we're at. Yeah.
Cool. Yeah, I was surprised. I follow you all, like your publications, and like I said, I'm relatively new to the whole Twitter side, but I went over to your Twitter. I didn't realize y'all had like 2.5 million people over there. I was like, whoa, whoa.
Yes, yes. No, we definitely crypto Twitter is quite a place, but
Yeah.
um yeah, I guess getting back to what we were talking about, because with that question about shorting in a bull market, whatnot, I guess if we're looking at different indicators and TA principles, what are some indicators you think people are using wrong?
Oh, so I would say the most common indicator is this. It's the RSI. I see this one butchered all the time. So there's often this mindset that like, okay, so when I do a video, it's 60 seconds, and I have to make it into a digestible format for a large group of people, but make it so that it's still a convincing argument as to why I think it's going to go up or down. And so
Mm-hmm.
some people say, oh well, just because it's overbought or it's oversold doesn't mean it'll necessarily go that direction, and that's an accurate statement. But RSI, I did a whole YouTube, and it's about 30 minutes explaining how to properly utilize that. So, uh, one of the biggest mistakes that I see from retail traders, creators, is they're only looking at one time frame. And so, I sometimes I get the comment, "Oh, you can't look at the hourly, bro." Well, the hourly feeds the 4 hour. The 4 hour feeds the daily. Okay, so
Mm,
there's this like I call it like almost like a feeding cycle.
mm,
And so for traders, like the first question you should be asking yourself, whatever it is how long do I want to hold this for? If the answer is a year, you should probably be looking at monthly and weekly charts. If you say one day, you should probably be looking at the 4 hour and the 1 hour charts for your trading during that time frame. Okay. But
mhm,
RSI, like, if I'm looking at a daily chart and it's very, we'll say oversold, we use this as an example, very oversold, but I look at
mhm,
the weekly chart and it's very overbought, well, that gives me like a high conviction that it's not necessarily going to go up. So, like, having on multiple time frames per your answer to how long do I want to hold this for
mhm.
is going to drastically increase the probability that you'll be correct in your prediction or your forecast to go up or down. Um, but I see this so often, just utilizing one time frame to make those calls. Uh,
Interesting.
RSI gets butchered all the time, which is sad because it is one of the most powerful tools.
Yeah,
Uh,
absolutely.
so I highly recommend if anybody is interested in how to utilize that properly, check out a YouTube. I have a 30-minute breakdown. Is it the most exciting content of your life? Probably not, but 30 minutes will definitely help you out a bit.
Awesome. And are there any other indicators that people are, probably
Yeah.
using wrong? Else,
So sometimes I see misreads of MACD pretty often. That one, you got to really determine. So I don't have MACD up here. Are your lines traveling in a bullish formation on the top half, or are they traveling in the bottom in a bearish trend? The other one is Fibonacci's. Fibonacci's get pretty torn up. So
Interesting.
if you're looking at a Fibonacci retracement, which is like how you find, from a TA side, how to find bottoms, a mistake I often see is they only put one Fibonacci. But if you've been in like we'll say a 3 month, bull cycle, and you've had a couple of dips along the way, you have to take account for the momentum that shifted during each one of those dips. So I've got a video on this too, how to utilize and set multiple Fibonacci's on top of each other to really find like those support and resistance zones.
I see. Yeah, no, that's definitely, clearing all that up, because I think, one more question I guess I have follow up from that is, do you see the same types of, I guess, misconceptions in, stock trading versus crypto trading? Is there one that maybe sticks out that people might, get confused about applying it to crypto?
In terms of misconceptions, I think like the overall environment in crypto is, it's a much younger generation. And here's the problem.
Mm-hmm.
I don't know where you went to school necessarily, but you went to middle school, high school.
Mm-hmm.
I don't know if you went to college or not, but it doesn't matter. None of our educational system offers education on investing, on
Yeah.
stock market, on technical analysis. They don't even really teach you how to manage it. Yeah, I'm old. I call it a checkbook now, but to manage your checkbook. And so it's kind of like this TA world is a mysterious area. And,
Mm-hmm.
I was fortunate in college to have someone that taught me TA. The younger generation getting into crypto rather than stocks is already into a very Wild West mindset. And so the misconception has only grown through social media that this is just hocus pocus and it's a magic 8 ball and it's astrology for bros. I see that all the time, and so that's like I'm trying to break that misconception that you can use this for stocks, but guess what? It's pretty powerful over here in your cryptos too. Sometimes it's not cool. Like, when I was back before the last bear cycle, no, I was not super cool on TikTok saying Ethereum was going to have a massive drop. I mean, there's a lot of hate behind it, but that's the reality of it. And, empowering people to see that stuff on their own when they're making those decisions at 2 a.m. and they're panicking. That's kind of the goal. So to break that misconception.
Totally. Should we get into talking about candlestick charts? I want to, go through that example before we sign off. But I think, I guess talking about that principle, because that's something that I think, getting into TA, a lot of people, first want to understand what that is. I know I've seen a lot of content across TikTok about that. So I guess, how do you read candlestick charts?
Yeah, so this is so candlesticks, I made a video about this a while back. Like, if you're utilizing a line chart. So instead of seeing these candlesticks, I got my pen. Instead of seeing candlesticks, you just see a line on your chart. You're really, really hampering yourself from a lot of information right there. So if you don't know how to read it, so your green candlesticks, you open low and you close high. Okay, so that your open will be down here towards the bottom. Your wicks is the highest price during that period, or the lowest price, vice versa. And it's the opposite for your red candlesticks. You open high, but you close low. Okay, so it reverses your open and close periods. And I see these. This is another. I always get a kind of a giggle out of this. And my TA, when I teach TA one-on-one, I talk about the cheat sheets that flow around the internet. Oh, that's a bearish abandoned baby right there. That's the pattern that we see. Here's a problem with it, particularly in crypto. is you'll waste so much time with these cheat sheets trying to confirm whether that's a pattern there or not. Like, oh, is that a bearish abandoned baby? Meanwhile, because crypto, you gotta, it's flipping red, green, red, green, red, green on your like third candle over. Don't waste your time with those cheat sheets. There are far better tools that'll give you more information in a faster period. But in terms of these candlesticks, there are three that really matter. So, like, if you're getting a big green one, it's pretty long. You're typically going to have a few more smaller green ones come in, particularly in crypto, because that's what I like to call the FOMO rally, where those people are like, "Oh, it's pumping," and they're going to push
Yeah.
it up a little bit more. But
Totally.
then your big investors that got in early, your TA traders, they're going to see this, and at the top of an uptrend, you'll typically get what's called a a let me get a doji or a spinning top, and it literally looks like this. I mean, I honestly
Mm-hmm.
don't care if it's green or red, but if it looks like a plus sign or literally like a spinning top at the top of a
Totally.
trend, that's a good sign of a reversal. So here we saw that with Ethereum on the
Yeah.
last drop. We're seeing it. This is Luna actually up here on their monthly chart. We're getting a bearish spinning top right here. Um, so when you see those, it's typically 100% typically indicative of a down drop. And the same goes if you see it at the bottom of a downtrend. So when you get your big red candlestick
Yeah.
down like this, you can
Mm-hmm.
typically expect it's going to go a bit further. That's the norm. So what I want to see is these red candlesticks to get smaller and smaller and smaller, and then we get
Mm-hmm.
another plus sign, another doji, and that typically indicates a reversal back up from a candlestick
Yeah.
analysis.
Interesting. So you're looking at these candlestick charts, making these conclusions. I guess, you kind of understand what it's going to tell you about the price, but then what do you do with that? If you're seeing that, oh, this looks like it has an uptrend, or oh, this looks like it has a downtrend. What are some things you might do given that information?
So, of course, I need to see it on multiple time frames before I determine sort of like a trend reversal. So, I
Mm-hmm.
mean, we've seen Ethereum, it's been coming down, but the price has pushed up quite a bit here on some of our other indicators. But again, I'm getting a bearish signal here on the monthly chart, and we're starting to see weakness on the weekly chart. But what makes me decide if we're going to have a trend reversal is not just the candlestick. So, of course, I'm looking for that doji or spinning top at the top or bottom of a trend. But then I also want to see, are we, I'm not going to say we're going to have an uptrend if our RSI is sitting at like 95. Like, that's a ridiculous statement.
Mm-hmm.
And vice versa. Now, if we're in a bull market, you know, uh, it depends on like how I interpret RSI. But if it comes to like a level of around 40 to 50, and we've been in an uptrend, that's typically indicative of a reversal. However, if we're in a bear market, I'm looking for levels around 10 to 20 for short-term reversals in the market. So there's it really you have to answer that question: how long do you want to be in this trade for?
Totally.
Because how you interpret that will determine the time frames that you're looking at charts. You have to be really flexible with those trades.
Awesome. Yeah, and I guess, sorry, if you're like looking at that information, getting these conclusions, why is reading candlestick charts better than just reading standard price charts?
Uh, so I mean, you get a lot of information. I mean, if you're looking at a big, a line chart and you see
Mhm.
it shoot upwards, okay,
Yeah.
when you look at that intuitively, like you don't see how many periods have been in that line, okay?
Yeah.
Whereas when you shift it over to periods, you start breaking it up. You're starting to see like, oh, there's a lot of momentum here.
Hmm.
Okay, it's starting to dwindle. Whereas, or vice versa, when you're on a downtrend, you don't get that type of information. And not to mention, I mean, what if you don't want to learn any TA at all? That's okay. Like, it's not for everybody. Um,
Hmm.
but what do we always say? Buy red candlesticks. Stop buying green ones. Like, I mean, if there was a general rule amongst it, I know. Like, I've probably gotten 100 questions about Filecoin. So Filecoin's one of my picks. I love the
Hmm.
TA on the charts, but it's scary to people because what do they see? It looks like this right now. Well, after every bear cycle comes a bull cycle, and there has to be some patience that comes
Totally.
along with it. I know it's terrifying. I don't walk into every trade and I'm like, "Ooh, this is going to be a gold mine." Like it's not the way it works.
Yeah,
Uh, you have to, if you want to experience joy, you have to experience pain for a while, and that means buying those red candlesticks first.
totally. That totally makes sense. So yeah, I guess, talking about looking at charts and indicators, I know we talked about the death cross a little bit before, RSI. What are some other indicators that beginners should know when reading charts? I guess.
I'm glad. I'm glad you brought up the death cross. So I see this is another one that gets butchered all the time. Okay, and so what happens is a lot of the death cross and the vice versa, the golden cross interpretations. People are doing that with simple moving averages. Simple moving averages are very slow, and I like to use what's known as EMAs, exponential moving averages. And here's a quick summary of the difference between the two. So, a simple moving average, we'll say it's the 20 SMA. The last 20 days are all weighted equally. So, day 19 is just as valuable as yesterday. An EMA, if we have a 20-day EMA, it's saying yesterday is more valuable information than the day before. And that day is more valuable information than the day before. So it weights it forward. And so it moves faster with your candlesticks. It appears faster on there. And because the SMA is so much slower, because it's thinking about, oh, I care about day 20, we see a lot of posts like, oh, we got a death cross coming along, and it makes the hair on my neck stand up because it's so lagged behind the information. Like 9 times out of 10, those end up being incorrect forecasts. But typically, not all the time, I'd say probably about 70 or 80% of the time, by the time someone's seeing a potential death cross with SMAs, I'm
Mm-hmm.
starting to see a golden cross on the EMAs, and so that's when I shift tune. So
Yeah.
check out EMAs on your charts. They're really simple to set up. You can kind of see them faintly here. I like the 20, 50, and 200.
Mm-hmm.
Use three of them. Use three of them because what's better than having one death cross or one golden cross? Well, a
Yeah.
double death cross or double golden cross to get more confirmation.
True. Um, awesome. I think we have time for one last question, but
Okay.
yeah, I guess just with making all these, reading all these charts, making these decisions, how do you manage, um, you know, spreading? I guess what's the rule of thumb for spreading your investment over multiple assets? In terms of like risk and diversifying your portfolio.
Yeah, so I see this sometimes. I had an individual, they were kind of like, you could tell they were like flabbergasted, they were exhausted, um, and they had 139 cryptos in their portfolio. And so my first question to that person was, how do you process all the information? Like, I could pick a random one on here, and I'm like, what's the next step on their milestone, their roadmap? Okay, what is the CEO of Crypto Blah doing this week? Okay, and so and of course there was like, oh, I don't know. Well, you
Mhm.
need to be. I think that having any more than like 10 to 12 cryptos in your portfolio is a really bad mistake.
Mm.
Um, I personally like when we're in these choppy markets. I have about 6 or 7. I have some low cap alts that I'm just hodling. Uh, but having any more than like 6 in bearish trends or 10 or 12 in bullish trends is really too much because you're not able to process all of the information to make a decision. Do I still want to hold this? And
Yeah.
additionally, over diversification becomes worsification. That's kind of like a phrase from the stock world as well, and I think it rings true here in crypto as well. Um, I would rather H bar. It went down. That when we were up ranging between 40 45 cents, that was a lot of great trades. It dropped down to 26 cents. I don't care, like, because that's one that I have conviction in, and that may not be for everybody. You have your own favorites, but the point is when I go to bed, it doesn't bother me. Should like that should be the same for people that are particularly getting into trading. If a trade or investment goes south, you can still go to bed. If you have 139 cryptos in your portfolio, probably about half of them are going to be underperforming and you're going to be sweating when you go to sleep because you don't believe in
Mhm.
them at all. So having
Yeah.
conviction behind a couple of cryptos and processing information on a regular basis is much more feasible. Don't over diversify, and it's easy to do when we've got 16,000 cryptos in this
Yeah.
space.
No, totally. And I think that's a really good point because what I've seen, at least with a lot of people, a lot of my friends just getting into crypto. Oh, I want to buy this. I want to buy this. Like learning about these, niche coins that other people might not have heard about, that they want to buy because no one's heard of it, or they just, get excited and overly excited and don't necessarily, have a plan or know what they're going to keep track of. So that's a very, very good advice.
I think what a part of that stem is that you kind of see like the psychological behavior of people, like even in the stock market. What happens when an IPO came out in 2021? It's the same mentality in crypto. Is like, this just launched, it's going to the moon, win Lambo. And so people will pile in at that very beginning with little knowledge that the original founders or the holders, like, the top 10 holders may own 95% of the token, and they start dumping on that fresh IPO or fresh ICO. And so I think some people get lucky in those, but then the question comes, well, do you know where the tops is at? And when it's that young of a crypto, I mean, it's even really super hard to do TA on those. So I think the answer is no.
Totally. Okay, I think that's all we have time for. But Tim, such a pleasure. Thank you so much for joining again. I'm really glad we got to talk about TA. And make sure before we take off that you're following Crypto Weatherman, you're following CoinDesk, and make sure you give us some likes. So yeah.
Awesome. Thank you so much for having me on, and I look forward to doing this again soon.
Same. Take care. Have a great weekend.
All right. Bye now.
Bye.